Hello. Whoops. I'm logged out. Can I come back in, please? Thank you. There we go. Hello, everybody. Welcome back to the RationalInvestor.com's daily brief. Have to get used to that. Anyway, nice to see everybody this morning. We got a bit of a smaller crowd this morning. I'm not quite sure whether we had planned this morning one of our master node. I don't even know what you call them. But anyway, back in the summertime, we had a nice presentation by Philip and Kevin on master nodes. And we had penciled in him in here this morning. So I'm not quite sure if he's going to turn up here yet or not. But if he does, we'll give him some room to do a presentation for him this morning. I don't think the Bears are around today. So it's primarily the bus driver. How's the bus looking today, Alex? We on good course here?
Looking pretty good, yeah.
Awesome.
How are you, Brian?
I'm always tickled pink whenever we load up the daily brief here. I get the privilege of hanging out with all you cool cats. Look at Dan with those cool sunglasses. Dan the man. Anyway, looking down at the lounge. Great to see everybody here. Anytime I know that Alex has got my back, I always feel confident that we'll give you a good product here this morning. But as I said just a moment ago, was expecting we were going to do a master node presentation this morning. Not quite sure what happened to Philip. I also know that Greg also said that he wanted to participate in that. So Greg, if you are watching on YouTube or whatever, and you want to pop into the lounge and have a couple comments about master nodes, I suppose that wouldn't be such a terrible thing. But they aren't here, so we're going to have to sort of ad-lib this a little bit here this morning. So welcome back, everybody. Of course, today is a Fed day. And if you are new to investing, new to trading, new to this, this wonderful world of speculation, you should understand that on a fairly regular basis, the Federal Reserve Board in the United States of America meets. You could argue to a certain degree that the Fed is, the United States of America is still sort of the world's economic engine. So as a result, when we have these sort of big economic events come out of the United States, the whole world just sort of pauses. You guys who have worked with me over the years, actually, it used to be really handy. You could just really quickly link on event notices on this economic calendar page. But anyway, I like to follow this economic calendar page. It's nice and handy. And if you want to add it to your dashboard, whatever, this happens to be like a Forex site. But what's really cool about this is anytime there's a big economic event, I just posted the link in the lounge there. Anytime there's sort of a big economic event, they'll highlight the economic event in red, suggesting that the market's probably going to pay attention pretty closely to it. And you can see we've got FOMC economic projections, Fed interest rate decisions, Fed press conference. This is a fairly big event. So by all means, if you're relatively new to the game, you have to understand that this is what we call a big fundamental driver. Interestingly enough, and I don't know whether it's relevant or not, but if anything, make note in your journal. We used to always say that if you had a down market into a Fed event, that actually should bode well on the other side, right? And then conversely, if you have a very strong market heading into a Fed event, that actually is a little bit dangerous, because usually on the other side of that, you're going to have a lot of unwinding. So, seeing the stock market fairly well bid here this morning, I like to follow this little FinViz just sort of barometer dashboard here. You can see markets coming off a little bit here from these highs. But on balance, NASDAQ fairly strong. S&P's up good 6 points or so. If this market stays well bid into this event, then that's actually a bit of a warning sign that, watch out the other side. We might see the world, the market unwind. You might, like you guys have probably heard the buy the rumor, sell the news, sell the rumor, buy the news. Well, it's a classic, exactly the same scenario. So let's keep an eye on how the market's going to behave following this. And then, of course, I would be very upset if I heard that you guys were strapping on a lot of positions heading into this event, because that's a big no-no. And the rule technically is, well, am I going to really give you a picture? Jamie asked in the lounge, has anybody got a photo of Brian with his face head on? I'm almost afraid of what Jamie's going to do to my poor picture if I give him one. So I don't know whether we want to give Jamie that picture or not. But anyway. All right, so back to the topic. I just saw that Jamie posted that question in the lounge. There is a strict rule of trading. And again, if you haven't seen this before, Axel, have you ever had any experience trading around the Fed? Is there anything? Oh, it's for the meetup. Okay, fine. I love picking on Axel because he's sort of my novice trader, and he's got just the most beautiful attitude in the world. And I think if he wants to, he can be a monster market participant. But Axel, have you ever had any experience with the Fed? Who can help Axel? And if Axel knows this, then awesome, write it down. But who can help Axel? What is the rule around Fed announcements? And actually, I even posted it in the lounge this morning. So if anybody can remember it, that'd be good on you. And if you haven't heard this before, then for Pete's sake, please journal, 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 journal. There you go. Albert nailed it. Right? Never trust the first hour after a Fed announcement. And what's really interesting about the world that we live in now is Jamie and his gifts. I swear, Jamie is he is the bomb when it comes to the gifts. So he's having fun chatting away in the lounge. But Jamie, you're distracting me here. While the daily brief's on, don't come and distract me. Maybe I should just minimize that because Jamie's just having too much fun here this morning. He's like Captain GIF. Anyway, so the rule is that we shouldn't put on a trade, or at least don't trust the market action until at least a good hour after the Fed announcement. What we're probably going to see is the market's going to get extremely herky-jerky around that event. And if we look at some of the indexes, for example, here's the S&P. S&P is a really good example where this thing could very easily wash both sides of this range very easily through this Fed announcement date. Hell, we might even go to new highs. You can see the potential AB equals CD that's floating out here. You might see the market jump up here into that first hour and then crap out, and that's the top. I've seen that happen lots of times. So the simple rule is, I'd be very disappointed if I heard people that were putting on trades heading into this event. And the rule is we don't trust the Fed announcement until an hour after the actual announcement. So if anything, you want a really good lesson in how the market acts, you don't necessarily need to put a trade on, but just watch what happens around this Fed announcement if you've never seen it. Usually the markets go really herky-jerky. And, we were talking a little bit about swing trade setups and stuff like that. And I saw this really pretty looking bear div with Willie Stupid in the euro. But I even posted in the swing traders group, I was like, we can't touch this until after the Fed announcement. And my hunch is they're actually going to go up and bust this top here heading into that announcement. So yes, I have this metric on here, but this is almost exactly like what we saw in Bitcoin yesterday. I would argue that this very well-defined top, you can't put on this trade until after that Fed announcement is done. They may just go around, and I wouldn't be surprised if this is a trap. They're just setting the sort of noobs up to get stopped out here. But we'll see how it goes. And then once that Fed announcement is done, then we can go and take a look at these swing trades. The only sort of swing trade right now, actually, and I'm really interested in this one again after the Fed announcement. You can see we actually have a good example of a triple divergence. You got this high, that corresponds to that high. You got this high, that corresponds to that high. And you also got this high, which corresponds with that high and that high. Willie stupid. So swing traders of the world, pay close attention, especially once the Fed announcement is done. If we get any sort of market structure up here to get short, following after that Fed announcement's been done, I'd be very interested in hunting a trade idea here. And you can see there's quite a bit of room just to come back down into support here and produce better than a 2-to-1 risk reward. So let's keep a close eye on the crude and the euro following that announcement. It's interesting with Canada. The rhetoric that I'm hearing hasn't really changed. I got a bad feeling that Canada's in a bit of poop here. And actually, it was really interesting. Sort of a side note for you guys this morning. And I don't know, did Philip ever turn up here? So I don't think we have to worry about that. And we don't have Mr. Bear here. So I'm just going to sort of have fun just ranting here today, guys. I had a gentleman out of Australia. And I can't remember his name just off the top of my head, who sent me a really interesting video on the Australian real estate market. And of course, we know that we're at the end of this commodity-friendly cycle. And so that means that the commodity proxy countries, ironically enough, I don't know whether you guys realize, a country like Russia is at its absolute zenith right now. It's at its absolute peak. I would argue, Canada a few years ago was at its absolute zenith, at its absolute peak. These countries, Canada, Australia, Russia, South Africa to a certain degree, we are sort of the commodity providers of the world, the supermarket of the world, if you will. And this gentleman, I think he lives in Australia, but I'm not totally positive. And then by all means, if you're watching this, hey, that was me. Just send me a message and I'll share this video with everybody on the site. But he sent me a video about the Australians, and they're getting really, really worried about their real estate market right now. Now, that's Australia. I would argue that Canada's got a lot of sort of similar problems. But one thing that's different about Canada versus Australia is we're literally picking a fight with our biggest customer. And I don't know whether our biggest customer is picking a fight with us or, our political leadership here in Canada is so arrogant that this will inevitably turn into a bad situation. I'm really worried about this for Canada. We've made lots of comments about the ridiculous real estate market here in Canada. I mean, it's just nuts. And one could argue that, once we get on the other side I see Adam's posting winners. So great to see people are knocking out doubles. Way to go, Adam. Nicely done. As I'm chatting away here. Once we get done with the Fed here, I'm really worried that, for a country like Canada, we go back into the leadership in the United States is almost creating like an ultimatum for Canada. And, considering the fact that we had this swing setup, we have a massive divergence here already working. The trade's actually technically just working away, and we even made a new low here this morning on the Canadian dollar. It's awfully hard for me to be too big of a Canadian dollar bull. And the irony of it all is that we actually at TRI are shifting our company out of Canada and moving it to the United States. I think I've joked with you guys. We've got one of our site members, great guy. He's basically captain of the swing trading room. He's out of Hawaii. And if it's one thing that I would actually really be interested in investing in is it's this Hawaiian real estate. And then, of course, we got James in Puerto Rico. And Adam actually is in Puerto Rico, so he's banging out doubles and enjoying tax-free status. Way to go, Adam! And those are actually investment ideas that I actually really like right now. I'd be very, very leery about the Canadian dollar. Now, the irony of the Canadian dollar, right, is that I would actually thought that at this point in the cycle, considering we're so close to the highs of the cycle, that we would have been up here, but we're already down here in the 70s. So if this thing really does fall apart, how damn low is the bottom? I mean, this could get really ugly for Canada. So all you Canadians, not a bad idea to have a little bit of a hedge. See if you can, at the very least, maybe refrain from buying Canadian real estate for the next little while. Maybe even have like a put on just to make sure, or be long a bunch of US dollars or something. But this is just a general warning to Canadians. This is looking a bit challenging here. The problem, of course, is that, does this actually set up a trade for us off of like position? And I think we're a bit late here coming to the short side of the party. So I don't necessarily know whether I have like a position to be short here. If anything, I would love to see the Canadian dollar somehow rally up into this area. Maybe that's on a crude oil spike or a spike in the natural gas or something along those lines to get it up here. But I got to tell you right now, in the short term, things are looking a little bit grim for good old Canada. And as I said, for the swing traders, I think actually you've got a swing short going right now. And a lot of this has, of course, to do with, the uncertainty around whether, this NAFTA is actually going to just collapse. We'll see what happens. Only time will tell. And, of course, we'll report what happens in the swing trading room, how that's going. So. All right, so those are the swingers. Let's keep an eye on the euro. I think there might be a trade developing there. Keep an eye on the crude. I think there might be a trade developing there. And as I said, the Canadian dollar is sort of working its way through its setup right now. Day traders, I haven't really been concentrating too much on the day trading model just as of yet. I've been so busy of late, so I apologize, Jacob. I know that you are working diligently away, and by all means, if you are interested in the day trading group, we have the room open there. I myself haven't been too active in the day trading field just as of yet, but definitely Jacob is on top of that. And, if you are interested in the day trading room, just get your butt in there. Post setups, journal, log, and try and, manage your behavior, because day trading, it's a bit tricky. You define your setup, for the model here for Jacob in particular. And you could kind of see there, it looks like there was a cute one in crude that developed. Everybody see the bearish divergence that developed through this kill zone here? Actually, I don't know whether that was a cute little empire or not. Let's see, 38. Oh, that's the same high. So a cute little inside bar failure. You could argue that that entire pattern is a fractal. And down she goes coming out of London kill zone. So, I definitely think there are trades in the day trader field. I haven't been that active in that. So I apologize, guys. One thing that I did notice, which just tickled me pink, is Sjord has got the screeners. He's rocking and rolling in the screeners, and this data will start becoming available to you guys pretty soon. But Sjord is slowly working away, putting together the L Tangonator screener on this back end. He had to deal with the getting this little website up and running and making sure that, we can bill and all that. So thank you, Sjord, so much for rocking that. And now he's got to the point where he's actually starting to build screeners and they're starting to spit out results again. So I can't wait, you guys, for that kind of information. And if you want to, you can, subscribe to the email list and just get that handed into you in your inbox on a daily basis. So lots of stuff is rocking and rolling here on TRI. Whether you're a day trader, whether you're a swing trader, whether you're a position trader, whether you're crypto, whether you're stock market, there's lots and lots of stuff on the go here. So I'm super excited about our future. As well, we had a request. Actually, this goes out to Jamie. Yeah, so Jamie's even posting there on YouTube, Australian real estate market looks like it's about to tip over. But Jamie had specifically asked whether we could set up a UK TRI room on the site, and Sjord said that he figured that he could put something like that together for you guys. So I thought that was great. What hopefully happens is we have sort of regional sort of groups that develop so you guys can meet. And Jamie actually asked me to give a shout out, particularly anybody that's in the UK. Be aware, December 15th, if I'm not mistaken, is the big UK TRI meetup. I think we're trying to do it sort of like once every 6 months kind of idea. So he wanted me to give a shout out for that. And if you are in the region or you plan to be in the region around that time, see if you can come out for that. If there's a specific web page or something like that, Jamie, that you want me to do or post or talk about, just let me know. Okay, dude? All right, so that's sort of broader market. Like I said, FOMC is critical here today. So that's probably what we should be thinking about. Stock market, stock and stocks. I still have my little insurance policy on the NASDAQ. I don't really see anything to get too excited about here. We still have these gaps up here. You can still see the reload zone here. So nothing's really changed on this NASDAQ trade for me. Keep in mind, everybody, this is more of an insurance policy. I've got now probably, you know, I'm slowly building out my stock portfolio. So I probably got about maybe $5,000 or so invested in various stocks. It's not a bad idea to have a little bit of insurance just in case the stock market falls apart. You got something that covers your butt. So I've got like about $300 US working in this option. It's just, I mean, it's sitting at about like 70 cents. I paid $1 for it. So I'm not really overly concerned about, you know, and I'm certainly not, you know, going to trade this thing. It's a March option. So it's sort of like my insurance plan. And I, you know, considering too what I said about the Fed and how if the market's rallying into the Fed meeting, that actually is not really that good of a sign. So if this thing actually is strong into that Fed announcement, I'm still going to be looking for dumpy on the other side of this. And also too, remember guys that, you know, today is the 26th of the month, and the end of September is quarter end. So that means that if anybody heading, you know, especially mutual fund managers and stuff like that, we might see quite a bit of position squaring over the next couple of days. And especially on the other side of this Fed announcement, we have 2 days here where people are going to be more concerned about what does their portfolios look like. Do they want to show, you know, like mutual funds and stuff like that? Do they want to show the fund holders that they're long Facebook, that they're long Amazon, that they're long Twitter and all that into the quarter end? They might not. So be cognizant of the fact that we might get quite a bit of position squaring here in the next couple of days. That's totally realistic. So just be aware of that, okay? And, you know, in essence, as of the 1st of October, then we go into our first 2-week study, and we'll have to sort of figure out where the fund managers think we are in the economic cycle and play that whole game. And if we believe that we're near market top, then we should see things like healthcare and stuff outperform. We should see consumer staples outperform. And, of course, things like tech usually underperform. So, like I said, we should be cognizant of the fact that we have position squaring coming up over the next couple of days. And then we've got the first 2 weeks of the new quarter shortly ahead of us. There's going to be a lot of movement in the market here over the next week or two, guys. Be aware of that. It is interesting to note that tech, you know, and we talked about economic cycle and we showed you the first 2-week studies before. It suggested that tech wasn't going to do that well. And it's fascinating to see how tech is basically just sort of parked here. And you could really argue that we entered this trading range, I guess, back here, August. So really for the past month, tech really just hasn't done a heck of a lot, just gone sideways. And, you know, I know other people on the site are playing stocks like Apple. And I noticed that Apple is just sort of floundering here, right? Somebody had said, on Twitter on this day had said, oh, wow, look at Apple. It's a beast, right? Rah, rah, rah. But I kind of said, until we actually break through these trend lines and you actually start seeing signs of momentum bottoms, I don't really see anything to get too excited about here. And really, one might argue that there was a big old hole in the charts that needed to be filled in here. And all we've done is we've just rallied up to fill in the gap. Now, if you see Apple on the other side of these trend lines, well, then maybe we can start talking about tech rah-rah bull again. Considering also, too, heading into the beginning of the quarter, the end of this current quarter, is there going to be some position squaring? And then into the new quarter, we, keep an eye on what's happening here out of Apple. And, of course, a guy like me, since we made a new low here, at best, one low, two lows, I'd like to see a third test of this low and hold above these lows. And maybe we can start thinking about bullish bots, but right now there's just nothing for me to get excited about there. And it's sort of the same tone as that sort of NASDAQ trade. Something's just not right there. One thing I noticed earlier when I was looking at the US dollar index, can everybody see Willie is basically stupid now? And we do have a potential bullish divergence that's trying to build here. I do like the dollar, and I've sort of been talking to you guys about this for a while. A nice little stab down into 38.2. Maybe, through that Fed announcement, like I said, they're going to try and screw over the euro guys. Maybe we get like one more dip down against these lows. Euro pops up against the highs, and then the pivot comes. But you can see how close we are to these AB equals CD objectives. You can see where the 38.2 is here. We've been talking to you guys at great length about this sort of sloppy head and shoulders pattern that's trying to form here. I'm kind of thinking, I certainly don't like it here now, but I am definitely thinking that there's some sort of pivot in the US dollar's future here, maybe over the next week or two. And as well, what I noticed when I was looking at the market this morning was things like gold is starting to look a little heavy again. I think you could argue that I got a little bit lucky, and unlucky on my bond trade. Oh, punch in the nose. Lucky in my American Barrick trade. Nice double. You never know how the fuck this game goes. That's why you never put more than 5% of your money into any one trade. All you do is trade setups. Was the bond trade a bit suspect? I think so, looking back in hindsight. And you remember a week or two ago, I berated myself in Journal. Brian, obey your TRI, SOFs, blah, 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 blah. But I'm kind of feeling like this gold trade is down. It's done for now. And it might take a month or two for this thing to actually clean itself up. You can see the 50% level. You can see the tag of the trend line. I got my sort of double level. I didn't get the double on the option trade. I kind of fucked the trade up a little bit. But nonetheless, I did get myself into a quote-unquote free position. I sold two of the options. I bought three at 65 cents. Didn't spend a lot of money. The whole trade came out to a couple $100 Canadian. But I was able to sell two of them at $1, so I got that couple $100 back. I've got one free in the kitty. And I'm actually thinking that a nice test, and you've seen this on Bitcoin as well, a nice test of this sort of megaphone pattern here, and I might just go buy that position back. And also, too, Mr. Bear, he hasn't been overly optimistic about the gold lately. This, to me, I think is more just a function of Barrick itself and the TRI SOF having to deal, come up with the derivatives numbers. And they announced that they were going to merge with another big Canadian gold company. I think it was Canadian. I think it was Rand Gold or something like that. Nice trade. Hey, I'll take it. A win is a win is a win. What the fuck, eh? And I might even entertain thinking about buying a position back on a test of this bottom end of the megaphone here. We'll see how it goes. Only time will tell. Sort of continuing on that sort of theme, the gold and silver index in the United States, though I sort of like to follow to give me a sort of proxy on the metals markets because it's gold and silver. It's looking a little waffly here too. Not really a textbook double top. It did make a new high 2 days ago. But nonetheless, you could see, you know, V bottom. Could we come back down and test these lows? Sure. There's lots of open air here. And, you know, it probably, you've seen me do this before off of previous horizontal support and resistance lines. You notice that this is a traffic area in here. We've got a level there to work with. And kind of like the same thing with that Barrick, you know, I'm actually thinking we'll probably have to dip against these lows here. And I might entertain the idea of buying a new position here, or buying back the Barrick position, whatever, if I get a nice little reversal signal down in here. But for the time being, I don't see anything to be done here. And what I'm, you know, the whole point of this conversation is I'm actually warming to the idea of a US dollar rally here. I don't think it's today. I don't think it's the next week or so. I think this is going to take some time, probably, you know, probably about good or 2 or 3 weeks. Maybe it takes us in through that first 2 weeks of the quarter and the first 2 week study and all that kind of stuff to actually see this pivot come in here. But I wouldn't be surprised if we do have some sort of counter trend rally on the US dollar here over the next month or two, heading into the fourth quarter in earnest. And that sort of, you know, puts a pause on the gold. It is interesting on sort of a side note, and I like, you know, because the level oneers are sort of, you know, we got a whole new batch of level oneers at work in the market. One of the concepts that we sort of talked to you guys about in the level one is the idea of intermarket analysis relationships and understanding how different markets can give us information about the health of the economy. Little concerned here to see that the gold is outperforming the silver. You can see we broke out again. And this basically implies that the economy isn't as strong. When gold is outperforming silver, it means that, you know, if there is any kind of up in the market at all, it's people are bidding sort of security. And gold is sort of like a safe haven, whereas silver is more like an industrial metal. So you could argue that the economy actually is most happy, most strong, things are growing, things are rocking and rolling when this relationship is going this way, not this way. So there is problems underneath this metals market and this economy that I don't like. It is interesting too, you know, more breadth kind of conversation. We haven't talked a lot about this recently, but, you know, I'm a big fan of not, you know, listening to government officials. I hate listening to government officials trying to tell you how the market works, because 9 times out of 10, they're wrong. I want to let the market tell me, because absolutely, without a shadow of a doubt, the most powerful message you can get about economies is when people vote with their money and they vote with their wallets. That if you're not familiar with this, and all you level oneers, this is probably totally brand new to you, but even some of you level twoers, you might have forgotten this. Hopefully all our veterans pay attention to this. But in essence, the TIPS, this is the Treasury Inflation Protected bonds that are issued by the U.S. government, versus the TLTs, which is just simply the long-term Treasury bond ETF. So one, the TIPS have an inflation protection component, and the TLTs, just the regular vanilla bonds, don't. So very simply put, when you look at a chart like this, if the TIPS that have that inflation protection, if they are trading at a premium to the non-inflation protected bonds, then it means that people in the marketplace value that inflation protection, and they're willing to bid up for those bonds for that protection. Conversely, if the TIPS are trading at a discount to the vanilla bonds, then it means that the market doesn't feel as though that there's a need for that inflation protection component, and the market will not bid up that inflation protection. Does that make sense, guys? It's kind of a hard concept for new people to trading to understand, but in essence, one has inflation protection. If it's more expensive than the non-inflation protection, then it means that people are bidding up, they're paying up for that inflation protection. As you can see, as we've sort of worked through the year 2000s and sort of along our thesis of the baby boomers retiring, the economy unwinding, in essence, growth, and you can't really have inflation without growth. So growth is under serious, constraints. As a result, that inflation protection has been diminished. There just isn't any demand for it because there's no inflation. There's deflation at work. Now, the worst part about this, of course, is that, the bankers want to continue business as usual, so they have to somehow offset that deflation. And what do to offset that deflation? You all know this, right? They print money, quantitative easing, helicopter money, right? So the point of the matter here is this is a direct graphical illustration of that deflationary, force in the market. And the interesting thing, of course, and it came to an absolute head here in 2015, 2016. But you can see that the market is trying desperately to reverse that trend. This is actually a really, really important battle zone right here. And, you guys have probably heard that the Fed is now, quote unquote, trying to normalize interest rates. Well, why would they be doing that? Well, because they feel as though they've printed enough money. They've offset the effects of the baby boomers retiring. They feel that they are winning the inflation-deflation battle. Now, I would make the argument, we'll know for certain if this thing confirms this inverted head and shoulders and they start applying a premium to the tips again. Then we will know that we are back in a world of inflation. Does that make sense? Anybody? Looks like it makes sense to Jamie. Jamie is one of our veterans over there. For all you new people, this might be a very difficult concept to wrap your head around. But it served us very well. So I'll make reference to it in the future going forward. One thing actually about the market that really bugs me. You guys notice that if we look at the amount of stocks that are making new highs versus new lows, are we seeing more, like here is really personified. What letter of the alphabet is that? That sure looks like a big fat M to me, eh? Up, down, up, see you later. Big, broader market sell signal. Thanks, Joseph. Well, remember, I have been doing this for about 30 years, eh? So hopefully, I suppose that's a good sign, right? Joseph just says, you explained my Econ 1 and 2 classes in about 5 minutes. And then conversely, talking about breadth of the market here, when we start making new highs versus new lows, W, that's a buy signal, right? So if we look at the broader market's breadth, the market, how many stocks are making new highs, how many stocks are making new lows, and I look at what's happening here recently, what do you think, guys? Does this look M-y or W-y? That looks very M-y to me, doesn't it? And this is the great part about breadth and intermarket analysis and stuff. There's no fucking talking heads to blow smoke up your ass. Do you see M's or do you see W's? Anyone? I see, maybe it's just me. I don't know. I see this. And then not only within this big M, I also see this M. Talk about a goddamn brick wall. That is like solidified resistance. The market works its way down, puts in this sort of little W, rallies right back up into this area, and then bang! Another big fat M. And now look what's happening here today. We're actually going to break through this key support. Do you see that? Unless the stock market has some sort of massive rally. So when I look at this, to me, I'm starting to see a lot of very sort of top-heavy kind of messages. And notice like this low here was a V bottom. So that low should be by default tested. That doesn't look like a bull market to me. I don't mean to be rude to Mr. Mr. running the United States guy who says everything's hunky-dory. Internally, this looks problematic. And really, I can't get super bullish of the stock market until I start to see this thing W out here. And then if we look at the actual advanced decline line, the number of stocks going up versus the number of stocks going down. Same sort of thing here. You know, we had a little bit of a W here. Then we M'd and another M and then another M. And then we broke and this big honking M has come in here. We rallied off of those lows, tried to put in this cute little W, but smashed that. So again, you know, what's the overall trend here? I don't know. That's not looking overly optimistic to me. I don't know, call me crazy. V bottom, making lower lows. Looks like we're in a channel here. So I don't know. This is looking really iffy, internally wise. You know, I thought it was really interesting. The bear has talked to us lots about his very acute interest in the VIX index. And we had a really interesting level that was traded to. Now, ideally, we would like to see a candle body come in here and actually fill this gap in with a body, meaning, you know, the market like closes right down here or opens up down here and then closes higher, filling that gap in. So I don't know whether we can actually call this gap filled in. But, you know, there's a, just so you're all aware, there's an old rule in the market that says you just buy the VIX anytime it ever gets into single digits. We're not at single digits right now. We're at 12.05, but gee whiz, that is awfully close. If we got any sort of massive blow off top in the stock market, and you actually see a print below this 10, and you can see it very rarely ever gets down below, where's 10 here, right? So it got down into this area here, and then you see the end result if you just bought the VIX, and boom, right? Eventually the market tanks. Now, one might argue that, okay, well, you know, I'm going to buy your VIX below 10, Brian, but I had to go through all this mess as the S&P was working its way higher. But notice the VIX didn't really go much, a heck of a lot lower. So the point here is if you are trading the VIX, there's an old rule that says if it ever gets down into single digits, you just buy it. So, you know, still quite a bit of a fight here. I'm not going to sugarcoat it. This is messy. Could we, you know, push to new highs here before we're done? Sure. Could this thing come down and spend a little bit more time down against these lows and fill in this gap? Sure. But you know, saying that we're near a market bottom and that the market is only going to go up from here, that's just irresponsible talk. If anything, we should look at this and say we're near a top. We may not be there yet. And, you know, as Mr. Bears pointed out, I don't see any M's here in price just yet. And if anything, if we start getting any kind of WE down action down in here, I got to start, you know, getting ready for the dumpage. But I just don't see it just yet. Yeah, we're getting close, but just not yet. Internally, though, there's definitely problems. Something just does not smell right about this stock market in my eyes. Probably another sort of interesting anecdote for you guys here. I don't know whether any of you, especially for the level oneers, are you familiar with Dow theory? Dow theory basically says that you cannot, the blue line here is the Dow Jones Industrials, and the yellow line is the transports. And you can't really have a breakout in the industrial sector, stocks moving to new highs, without the transports confirming what we're seeing out of the Dow. And here was a great example. The transports actually M'd out. The Dow went to new highs. And there's Admiral Akbar. Does everybody know Admiral Akbar? Admiral Akbar, it's a trap, it's a trap, right? So, gee whiz, look at what we have happening to the transports. We've got this very well-defined, kind of like a head and shoulders up here. The Dow is trying to push to new highs, but the transports has disconnected. So there's another little warning sign that there's something not quite right with this market. And, of course, it is September, so, you know, they don't call it the fall for nothing. So don't be surprised if stock market has to take a bit of a pause. I think probably the one sort of thing that I got completely wrong out of this past couple months was my overt bullishness of the bond market. Stocks really haven't done a heck of a lot, but gee whiz, I went in and bought a bond call, broke all my TRI SOF rules, and geez, I just got my fucking head handed to me. These options right now, I paid $1 for them. They're sitting at like 20 cents. Oh, Jesus Christ. Good thing is, of course, Brian doesn't put too much money into any one trade. I risked like 250 or 280 US dollars. No, actually, it was closer to 300. And you know, now that option's worth like $60. Oh God. So good lesson in how you can get your head handed to you in options very quickly and keep those bets small. The good part about this trade, of course, is that it's a springtime trade. It's a March option, so it doesn't expire until the end of March. So let's see how that $300 invested actually works. If the market does break and this thing ratchets up, if I actually get a W here, I might even actually go and buy a new position, maybe in like June or something, and see if I can trade my way through that June position and then just clean up the March trade. But I'll keep you posted on that going forward. Anyway, we'll see how it goes. All right. So some fun stuff we sort of talked about. You know, I often make reference to this gold Dow ratio and how historically it's done very, very well in sort of painting generational pivots. I do believe that this would look a lot different if it wasn't for the fact that Mr. Bitcoin came along and literally ate gold's lunch. And what's really interesting about this is you can see gold was getting ready to rock and roll here, and then this Bitcoin thing came along, and you can see that gold just ran into a brick wall. And really the window really wasn't that long, eh? I mean, look at the window. This is where gold was supposed to go, woohoo, like that, right? And our gold Dow ratio would have come down and tested these lows. But this thing called Bitcoin, you can see it wasn't that big of a window, right? It was basically that window right there. Bitcoin basically came and took all the purchasing power, which is just absolutely remarkable. And you know, they often say, right, you cannot write better fiction than reality. There's probably, and you know, like Doug Casey and all those guys, so upset and so, you know, pissed off about the Bitcoin and crypto and it's all a fraud and all that shit. Well, you can see that they were positioning themselves for this rally, and Bitcoin came along and just took all that buying power. And what's really interesting is, of course, you can see how the gold, after that rally come in, that's when the top should have come in the fear asset proxies, and now it's behaving exactly how it's supposed to behave. And as Bitcoin comes down off of this wall. So, I mean, I swear, you cannot write better fiction than reality. So all those level oneers looking at the Dow gold ratio and going, well, Brian, it doesn't really make sense because this should have been down here. Yeah, I agree with you, and I think the reason why it isn't is because, like I said, something came along and ate gold's lunch through that rally. I do believe as we go forward in time, and we might even be able to switch from Dow gold ratio to Dow Bitcoin ratio. That might actually be a very realistic conversation that we have over the next 10, 20, 30 years. But the long and short of it here is gold is kind of on the outs, I actually think, when it comes to sort of inflation protection. So, Joseph says, this is incredible value, Brian. Is teaching us advanced economic concepts. I have had to pay very much money in university for these concepts. Yeah, I bet. Yeah, and Joseph also says here, this is a DB worth watching again. You know, like Axel has some of the stuff that I talked to you. Does this sound at all familiar with the stuff that we covered in the level 1 program that you just took? If you guys want to bookmark this in your journals and in your diaries and stuff and say, you know, I'm going to go back, and anytime I want to sort of hit that sort of economic reset button and, you know, looking at breadth indicators and that kind of information. We didn't really talk too much about crypto today, and it's already almost 10 o'clock, so I apologize, guys. But every once in a while, we need to have like a trip back to the classroom, eh? And by all means, all of you guys in the level 1 program, at the very least, I hope you guys have this sort of matrix, this sort of grid set up. And really, this should be part of your vocabulary. This is all about being a student of the market and try to understand the sort of subtle messages that the market's trying to tell you on a daily basis. Okay, so that's sort of stock markets. I was a little disappointed this morning. I mean, we take a quick boo at some of the things I'm long. Holy shit. Alex, next week, Alex is going to do a presentation on with, I think it's Bart. He's going to do a presentation on uranium stocks, but these things all might be at the moon by the time that presentation comes around, Alex. So, I mean, what can you say? If this thing breaks out through 80 cents, hopefully everybody can see this now starts turning into weekly W's. Look at that chart, eh? Jesus H. Christ. That's like, it's poetry, eh? I mean, hell, if you guys want, if anybody's like, yeah, but Brian, I want to learn how to trade. I want to learn how to find ideas. I mean, just take this goddamn chart and staple it to your forehead. It's just that simple. I mean, that's ridiculous. So anyway, a breakout through 80 cents will confirm this wider W. And then, of course, we know we'll actually get a monthly breakout if this thing pops up through $1.10. I don't think that that's in the cards just yet. You can see there's a cheeky little gap right here. So for heaven's sakes, guys, please don't go and chase. Do not chase. If anything, if you want to join these names, just draw your reload zones, work your bids, and just be patient. So, yeah, feeling pretty good about uranium this morning. But, there's names that I'm trying to get in. This was a name that we had in our RRSP group, our stock group, VCIM candidate. And James, hats off to James. I don't see him on the site today. But hats off to James. He totally rocked this market, and I think insiders and stuff were long from this level. And he was a buyer here. And when I saw it, and he even posted in the lounge, he's like, yeah, I got filled. I don't know whether if I really want this fucking thing or not. But anyway, I'm filled. And I saw this, and I remembered that we talked about it in the RSP group. And I was like, dude, I totally want to get in there with you. So I threw my bid in. And you can see they just have absolutely no interest in giving me a fill, jerks. So I'm probably going to have to wait for tax loss selling season to get a fill there. And then the same thing, this is this Athabasca Minerals, same sort of thing. I mean, look at these charts, guys. If that was an altcoin, are you here? If this was an altcoin, would you be buying? I mean, the irony of it all is there's not a heck of a lot of difference in this stuff. Yeah, I mean, look at this big old gap right up in here, eh? What's that? That's at 98 cents. So I'm trying to get in. You can see I've got my bid working at this gap. If I have to wait into tax loss selling season, so be it. I'm not really in a big hurry. If I've missed this bus, well, shit happens. But nonetheless, you can see where I'm trying to buy. So that's uranium. I love uranium right now. Some of our little tech sort of plays, if you will. Really interesting. I mean, look at that chart. What a pretty little chart, eh? What do you think, guys? Is that a pretty chart? To me, that just looks gorgeous. And that's the irony of it all. This is the classic opportunity is now here or opportunity is nowhere. Anybody in the public that you talk to, they're going to say this thing's a piece of shit. Opportunity is nowhere. There's no money to be made. These guys are going out of business. And I look at this and I go, I think there's a shitload of opportunity. You know, all you need, and it was, I think, if I'm not mistaken, you just need the 200 period SMA. Yeah. All I need is just a rally up against these highs, fill in these gaps. You can see there's a cheeky little gap right there. Tag a 200 SMA, and I get myself a free position. So is that worth my while? I think so. And any kind of rallies, look at there's a honking big old gap right up there. There's also another gap there. There's a gap up here. Man, I think there's a lot of money to be made on names like this. So needless to say, I'm long. You can see where I'm long. And I think I better get my open orders to sell working because I don't know what's going to happen here. And the good part about this is sort of a pot stock slash crypto stock, right? Because they're doing the pot business on the blockchain, which I absolutely love. So Brian says, do you buy options or straight stock? Well, I can't buy an option on this. It's not option eligible. If you want to buy options, probably your best bet is to, like, for example, if you're interested in the uranium space, if I wanted to buy an option in the uranium space, I'm probably best to go and look at the big stocks. And this is sort of the biggest, baddest uranium stock out there. And I would be well served. Does everybody see how we basically came down and just tagged Mountain Man here? So, I mean, I personally don't like this as a trade location. I'd actually like to see a little bit lower. But, oh boy, this makes perfect sense. If I was going to trade options, this is the one I'd probably concentrate on the options market with. So you can see they're playing off of this trend line right now there. So, okay, so Calix, love it. I think it's definitely a risk worth taking. This DPW, now this is a weird one because I could have sworn I talked to all you guys that I was going to have my order working at 41 cents. And then I went back and I looked at my brokerage statement and I even looked at my open orders, and it turns out that I did have my order at 42 at this gap here. So I know a guy like Wayne, he told me that he got his fill here, and I said, oh no, I'm bidding down here. But that wasn't true. So I apologize, guys. I did have my order working at 42 at this level, and I am long. So I did get filled. So Wayne, if you see this later on, go, I knew that son of a bitch had that order at that level. God damn it. So I'm in there with you guys. Now, I don't know what's going to happen here. I honestly don't know. I will say this. If we do break this low, and that is 38.9 cents, I'll take the 10% punch in the nose, and I'm just going to walk away. So just be aware of that, okay, guys? I like this name because if anything, if crypto catches a bid here, these guys have the rights to a hydroelectric dam, which I think is awesome, to power their mining rigs. I mean, you literally can't write a better story. So if I was going to be buying stocks in this space, I love this kind of idea. It's funny. I remember I made the argument back actually, and fuck, I've got class I have to go to here as well. So I'm going to have to wind up the daily brief here, guys, because today's Wednesday, right? So we have class here I have to get ready for. But I remember I made the argument. I thought the best idea for mining crypto back in that last regressive cycle, 2015, 2016, was to actually go and buy like an old Russian nuclear sub and just simply run your mining rigs off of the nuclear reactor on the sub because Russia was so strapped for money. I thought that was a brilliant idea. If anybody could have done that, I would have thought that would have been just genius. I like these guys' angle. They've basically gone and locked up a hydroelectric dam. That's not bad. That's a pretty, I mean, technically rivers just keep running, right? That's not a bad source of cheap electricity to run your mining rigs. So I am long this one. So, and if anything, maybe we won't look at crypto in particular today, but what we looked at is a couple of crypto-related stocks that if you're interested in the stock market and you want to play the crypto side, rock and roll. Now, I suppose we'll finish off today with a stock that's just pissing me off to no end. So I went and did all my CanSlim research. Again, hopefully everybody saw that tweet. Great, perfect example of something that would be really good for your journals. Went and did a bunch of due diligence, research. Imagine that, actually doing research on this shit. Did a whole write-up, the whole thing, right? Came up with levels, looked at the fundamentals, looked at the story, crunched the numbers, everything lines up. Get my order working. I even got a nice juicy gap to work a bid at. And what do the sons of bitches do? And you have to understand, this is sort of part of trading in the stock market, is I'm sure there was some guy who was running that stock who saw my tweets and went, all right, let's run this thing, and they probably, all the people that sort of were interested in trading with me and my style. They probably started stuffing bids into the order book here. And I'm sure the market makers saw that and said, all right, let's just launch this thing. Fuckers. So, you know, if I've missed the boat, I've missed the boat. It sucks. It's the way it goes. You know, pure bot setups, the fact that they traded it up to the 50% level technically means that if you are trading this bot, your stop actually should be at scratch now. So if they actually bring the market back down to this scratch level, botters actually have to walk away. So obviously I can't trade this as a bot setup anymore, but I really do like the idea of just simply nibbling at the gap. Call it a Leanne James setup, if you will. You can see the market structure on the other side of the trend line. But I'm not going to chase this thing. If it takes off and it leaves me behind, well, so be it. Shit happens. But it's just an interesting anecdote of how you have to play the stock market. You guys think that the crypto market is manipulated? Holy crap. You ain't seen nothing yet till you go to something like the NASDAQ over-the-counter market. This can get just ridiculous how manipulated it can be. So just an update for you guys. I didn't get a fill here. Had I been filled, I would be just fucking tickled pink right now. But I am still very interested in seeing if I can pick some up off of this gap level here. Okay, so today was a little bit more sort of stocky. Don't really have anything new on this screen to really show you. If anything, what I wanted to show you guys, but I just showed you very briefly, Sjord's starting to get the L Tangonator screen up and running. So I think you'll be given a whole bunch of really cool information to chew on a daily basis. And it will actually give me ideas to talk to you guys about on a regular basis. This was a screener that hopefully everybody can see. We backed up against reload zones, against original double bottoms. We put in a divergence on this move up here, but the market broke to new lows. So as a result, no trade developed. But it was really cool because the other name on Sjord's screen this morning, oh, do I have it? Oh, I hope I didn't get rid of it. It looks like I did. Ah, crap. Anyway, the other name on the screen, there it is, SCG. SCG. Same sort of logic. What do you think, guys? Does everybody see the logic here? Came back down, reload zone. Beautiful divergence and even a cute little double D here. Gotta love them double Ds. Nice trend line breakout. And do you see how that's starting to, that trade's starting to work? So I can't tell you guys how excited I am for Sjord getting the screeners up and running. That's the one thing I've been sort of missing with these daily briefs is I want to, on a daily basis, give you guys ideas to chew on. And now we've got it. So I'm so, hey, there's Philip. Where the hell have you been? What does he say here? Snuck in here late for the day. Sorry for the misunderstanding. Was expecting to present in tomorrow's day beef. Oh, okay. Okay, well, I don't know whether Thomas is going to be here tomorrow. If he is, then we'll have to push you back, I guess, in a couple of weeks because Alex and Bart have got a screener for next week. I've got a topic for next week's presentation. So we'll just play it by ear, Phil. All right, I think we better leave it at that, or else I'll just keep talking away, blah, 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 blah. So you guys, let me know how you're enjoying the screeners as they come out. Basically, as Rob says, when do you think the screeners will be up? Sjord's basically working on it now. So, within the next day or two kind of idea. So super, super stoked about that, but I better shut up or else I'm just going to keep talking here. So Alex, what do you think? Did we do a half decent job? Did we give people enough information to chew on here today?
Yeah, I think we did a great job here.
Excellent. All right. I've got the bus driver's seal of approval. That's all I need. So you guys have yourself an awesome rest of your day. As for a heads up, Albert is here. Albert's actually going to be joining the TRI team. And he just had his birthday. So, a double congratulations to Albert. So I see you there. He's here diligently almost every single day. just being a man. So if anything, let's keep an eye out for what's on Albert's mind. We'll leave this sort of official talk about Albert for another day, but I just saw him down in the corner there. He did have his birthday yesterday, so if at the very least, just give him a big happy birthday. And for whatever it's worth, Albert, Liam's birthday is today. So you and he are side by side. All right, guys, I'm going to leave it at that. Again, I better shut up or else I'm just going to keep talking. So have yourselves a great day. All the best, and bye for now.